assuming you want to know what's going on a daily chart. I got to tell you, folks, do not chase a stock that's been up 8 days in a row. This is up 9 days in a row, everyone. 9 days in a row. Now, what you could do, one of two things. The number one question I get, folks, is how do I stay in a trade? Especially with a stock like this. How do I stay in a stock? I mean, say you bought it at $1, at $2, or $3, or even $4 or $5, and it's trading at $8.87. You're nervous. What do? Well, first of all, look at a 15-minute chart and get an idea where support might be. Even a 5-minute chart. You draw your line across support levels. And here's what I do. The first thing I do is when this is taken out, 775 is my support. And look where the VWAP is, 764. That's my support zone. That's where my stop is. If it comes down to that level and keeps going, fine. But I always tell people, you don't have to sell stuff at all at one time. Everyone has a thing in their mind when they decide to sell something, they sell it all. Okay, it's not necessary. You buy in tranches, you sell in tranches, meaning sell some, sell some, sell some. Okay, short, raise your stop under there, raise your stop under there, and keep raising your stop, like for example, right there, if that's what you want to do. The point being, you don't know where the top is, and you don't know where the bottom is going to be, or where the takeout would be, or where the reversal comes. So the way to do that is to sell when you see a spike. Most of my people sold some of this on this pop-up because it was near the old high, around 7.5. And it ran up to 8.5 when we took some more off the table. And it traded up to 9.25. And I told them people, it's at the end of the day or near the end of the day, you can sell some or all of it. But raise your stops, tighten your stops there and there. Stops are important, trade with stops. Do I like the overall chart? How could you not like it? But at the same time, it's extremely overbought. Anytime a stock goes from 62 cents to 936, 15-fold in a week and a half, you better be careful about getting hammered, because this will, when it comes down, be a $3 stock again. Take my word for it. So that's my take. Question on Win. This is a good chart. Why is it a good chart? Well, first of all, I like the group. I want to point some things out to you. I always draw lines at prior highs to get an idea where resistance might be. I also want to take a look at a chart. See, let's take a look at these lows. And if lows connect with highs at the same point, that's resistance. In the case of Win, we've had a 1, 2, 3, 4, 5 wave decline. And notice the third wave had 5 waves. 1, 2, 3, 4, 5 waves. It's called a fifth of a third. And then it came down, bounced off the fifth wave, retested it. Here's your breakout. Here's your retest of that line. It's called the kiss back. And then today, very important day technically, because it broke out of a base pattern. And I believe my targets are 79, 84, and 95. 79, 84, 95. I like it a lot. Question on the SPY, what to do with it? Well, the first thing you got to do with SPY is look at the S&P. So you look at the SPX. And by the way, I have a weekly webinar in my site where every Saturday I publish a 45-minute to an hour-long complete review of all the indices, the ETFs, 80 to 100 stocks long and about 30 or 40 short. And I do that for my people every weekend. Please come join me and you'll see the value of that alone is priceless. It's institutional quality. So what I showed my people is that we were oversold. We were at near support, slightly below it. I expected a snapback to at least test 3,900. If it got really jiggy with it, 4,000 where the 50-day moving average is. There's a declining tops line though, that may be a problem between 39 and 39.30 up there. If we get through it, we can rock all the way to 4,100. Do I think this is an important low? A major low? I don't know, but it's an important low in my opinion. But we'll see how far it lasts. This is a 3-day rally, and as we speak, the market flies through and is positive by 12. Check out the S&P 500 this morning, 37.22. Now we're almost about 80, 82, 85 points off the low. And looking at the NASDAQ 100, these are the only two indices I follow. I gave everyone a buy alert this morning on the pullback down to 11.3. It's now 11.640, 340 points off the low, and doing it in a very orderly rising channel for the NASDAQ 100. Let's go back to the S&Ps and answer your question on the SPY. When you have a pattern like this, it looks something like that. My target's 38, 20, 25 by the end of the day. We shall see. Market looks outstanding. We just came through key resistance right there, and we're on our way. What I follow is this chart, which shows me the 5-minute charts there and the hourly chart there. So let me show you what my take. We've had a nasty decline that saw the NASDAQ 100 go from 13.7 to under 11. We're talking 2,800 points nearly. It exploded, got to resistance, backed off, and filled a gap, held the 50-period moving average on a 5-minute chart. That's the red line. And now we've broken out. The key is going to be, and this is the big one, can we take out the channel top right there? That comes in around 11.8. We're at 11.640 right now. Now to the S&P, to answer your question. I know this is a long answer, but I wanted to make my point. The S&P 500 came full circle from 48.18, 43.22 to 35.75. I had a target of 35.85. Bounce, pull back, test the gap, didn't even fill it, and now we've broken out. The key is going to be, in my opinion, whether we can get up through 3,900. That's going to be key. There's lateral price resistance, declining tops line right in that area. But one of the keys on the hourly chart for me is when I see the moving averages cross over, the stock market or the index pulls back, tests, and goes again. Outstanding day for the market. Outstanding day. Now, your question about the SPY. Sorry I took so long on it. I wanted to give it some background. The chart on the SPY looks like this. Boy, I just got blown out of my chart system. Hang on, everybody. Only takes a few seconds to bring it back up again. There it comes. My bad. Okay, so here's the SPY. Essentially a double bottom, a little bit lower low. We fill this gap. This is key for me. Take a look at that line I'm drawing right now. There's a couple of highs in there. There's a gap there. There's a pullback low there, and there's a snapback high there. 389.5. Give or take a half a point is key resistance. In addition, your declining tops line or channel top coming into juxtaposition right there. My target, I would say 389, give or take 50 cents. But 389 to 390 is a good number to look for on a follow through. Okay. I hope that answers your question. I love the look of it. Lots of other questions. Let's get to them. GLD, that's gold. Well, you know what? I've been so bearish on gold for so long, but I can't say I'm bearish now, not based on this. But I will show you this. 1, 2, 3, 4, 5, 6, 7 waves, very unusually long. This is an island reversal negative top. But take a look at where we're at right now. Pretty much right on it or slightly above it. I think the key on GLD is going to be here. Again, I draw my lines where I see resistance and support and gaps and things like that. So that is resistance. We get above 161.2. We got a good shot at 167.8, then up to 174. So if gold is reversing, you can see where resistance might be. It's a no-brainer, technically, to say 167.8 and 174.5 are your targets. But notice it pulled back from that line. And at the 50-day moving average, which I follow, forget about 200-day moving averages, folks. Forget it. If you're a short-term trader, even an intermediate trader, you need to know where the 50 is. Now, the cross of the 50 and the 200 is another thing, the golden cross. But for now, let's just say that over 161.5 on GLD, I'm bullish to 168 and 175-ish. AbbVie, love that company. Do I like the chart? We'll take a look. I love biotechs, period. I was long AbbVie here. Let me show you something. When AbbVie broke across there, after coming out of this consolidation platform, there's your breakaway gap, moving averages cross over, the stock flags and runs. 1, 2, 3, 4, and a big fifth wave up, spike up to a long-term channel top. I told everybody, sell AbbVie, it's too far, too fast. Anyway, 173 down to here. Company's got great drugs, don't they? Here's what I'm looking at. If AbbVie pops 145.5, if you're long, great, just stick with it. But if it pops that level and you want to go long, my target is 153, 156 zone. Those will be targets for me, 153, 156. Once it gets above 156, it's Katie bar at the door. The stock would probably be 162 and 175 again. Apple Snapple